Welcome, everybody. My name is Jennifer Motzinger. I am your Executive Vice President. Welcome to our third economic update this year. Our goal is to keep you informed on important topics that affect your business. And we met in person on January 16th to present our 2020 economic forecast. And since that time, it seems like the entire world has changed. On March 19th, just 2 months ago, we worked to bring you updated information on the housing market, as well as keep you informed on what's going on locally with the regulatory community. Job site safety was a big issue at that point, and there were a lot of regulatory changes that seem to be happening just about every hour. Today, I'm pleased to report that all major cities and municipalities within our jurisdiction are offering electronic permitting and inspection services. A lot of you guys have asked me about electronic submittal of payment, credit card payments. They're in Pasco County, they are trying to be very transparent. So if you do choose to pay online with a credit card, you're paying merchant fees. Those can't be waived. But I'm always hoping for ideas from all of you on how we can streamline those services. So don't be shy to reach out and email me if I can be of any assistance to you. Today, I am also pleased to report that we are working together with all of our municipalities to ensure that you guys continue to build the home, the American dream of home ownership. And now that is so important as we see young families seeking security and health as they shelter in place. St. Pete has put their linkage fees discussion on the shelf, and Pasco County is looking at ways to level out their mobility fees and reduce incentives that will ultimately create a reduction in fees for residential, which I'm very happy to hear about. So in Hillsborough, what seems to be a tone-deaf county commission is actually looking at doubling our impact fees tomorrow, especially on parks and mobility, where they have already said that they don't have the ability to spend any money, and there's no plan to spend any money for at least a few years. We really hope that they come to their senses, and I'll have more on that, I'm sure, tomorrow. I do want to take a moment to thank our sponsor, Level Up Consulting. Trent Stevenson, who is the co-chair of Pasco Governmental Affairs Committee, he has done an outstanding job for not just the association, but the industry. So thanks to Level Up Consulting for sponsoring our webinar today. And with that, I am extremely pleased to introduce one of my favorite NAHB people. He is a longtime TBBA leader, and he's also the first vice chair of the National Association of Home Builders, Chuck Falk. Chuck, why don't you give us some insights and see what's going on from your perspective? I'm sure we're all interested in hearing what's going on up there in DC.
Okay, thank you, Jennifer. The report I'll give you today will be on the national level, and I appreciate the opportunity to be home and talking to my family here in Tampa. I've traveled around the country and seen a lot of associations, and we have the top association in the country. So Jennifer, thank you for all you do. We're going through unprecedented times now, and as obviously everybody understands, and things are moving fast, and then some things seem to stand still. Regulations and things seem to never stop. Jennifer, you were just talking about impact fees. So we have to keep our eye on the ball and continue to work in those areas. On the national level, Jerry Howard, our EO and staff and the senior officers, we've been working daily, having conferences with the White House, Congress. We've had several conferences with Ben Carson and Jerome Powell. Federal Reserve Chair, Mr. Powell, wants to hear what we're experiencing. It means a lot to his decisions he's making. And I spoke with him regarding building in the Tampa Bay area in Florida. And the question he had for me was, how soon will your industry be able to recover from this crisis we're going through. And my answer to him was that many of the builders and businesses are still reeling from the housing downturn that happened with the mortgage meltdowns and all. And so many people are just getting back on their feet from that. And now we're going through this. And the only way we can answer the question about our recovery from the health crisis is how deep this will go and how long it'll go. And it's good to see that we're having the opportunity to get people back to work, because I think jobs are so important, obviously, for the recovery and people to be able to buy houses. What we're experiencing is not an economic failure. It's a health crisis, and it's damaged the way we live our lives, and it's damaged the economy. So hopefully we're forecasting, and we're thinking that this will be a quicker recovery than we'd experience in an economic downturn. And some people look at it as a V-shaped recovery, and I'm sure people are going to speak about this in a few minutes. And some people look at it as a W-shaped recovery. But the most important thing that we're experiencing through this crisis is we were considered an essential industry. And the importance to that is that our industry is able to go out and work. We're able to provide shelter and housing for Americans. And as Jennifer mentioned, the American way, and we're able to work and feed our families, where a lot of industries have been shut down and they can't do this. And so a few weeks ago, we had the stand down where we wanted everyone to go out on their sites and pause for a minute and discuss safe working habits on the job sites. That is essential. That's very important for our industry, because many people drive by, or many homeowners look out and they see our workers working, and they may not be 6 feet apart or doing things. So, and I have noticed that I travel around Tampa Bay and I see construction sites with stands and wash stands and areas for people to wash and take care of their hygiene as they deal with this. And it's important that we follow these rules and these directions currently, because we do not want to have the government to come in and stop what we're doing. So we have to make sure that we accept the practices on the sites and follow what they ask us to follow. As far as membership goes, in the national level, membership has not suffered a great deal. We have lost some members. A lot of the locals are having a very difficult time surviving because of more than membership of their non-dues revenue opportunities that went away, and it's hurt their budgets. But we know that most associations are surviving, and we're hardworking. We're a hardworking industry, and so we will survive. One thing that has helped us is the PPP program. In Washington, our lead team up there with Jerry Howard and Jim Tobin, in the meetings we've had with the White House, we made sure that there were fair practices with the PPP program, where some parts of our industry was shut out, that we went to bat to help those areas, and we're getting relief so that everyone that's involved with our industry is able to participate in that program. And that's been a lifesaver for many of the small businesses. I guess that in closing, what I'd like to say is I think it's obvious that we were over 1 million houses short of a healthy inventory in new housing before this happened. It was predicted that this year we would fall behind an additional 300,000. So understanding the health crisis we're dealing with, we'll know pretty soon how far we are behind. But housing is important to our American way. We've learned that the houses we live in are not only our homes, they're our sanctuary, they're offices, they're our schools. So the importance of housing has really been raised going through this. But I am a firm believer, and I think every one of us in this industry believe that we are going to be the industry that drives our economy out of this downturn. And I want everybody to know here on the national level, I'm here to represent you. If there's anything that I can do to help our local association or any of our members, please let me know. And if we have any questions, I'll be glad to answer questions right now.
Thank you, Chuck. That's a lot of information. Christine and Tony, what's going on from your perspective? I'm sure our members would like to hear a little bit about what's been going on the last couple of months since we got together. And again, Chuck, thank you so much for your leadership. It's very greatly appreciated. Thanks for all you do.
Thank you for having me today.
Okay, guys, you're live.
Yeah, well,
Christine, you don't seem to be muted. Tony, you do seem to be muted.
there. Took a few tries. You can see my screen and everything all right?
Yep.
Okay. We're going to talk about what's happening here in the Tampa Bay market. Just real fast, to reintroduce ourselves, Christine Lang is our Regional Account Manager. Greg is our Director of Business Development. Christine will be speaking alongside with me today. She's our Senior Vice President of Advisory Service in the state of Florida. And I'm the Regional Director for both Tampa and Orlando for Metro Study. But I'm going to start real quick with an acquisition we just made. So here in the midst of this downturn, our business is still growing because we are quite bullish on housing. And we truly believe that housing will be one of the leaders in the economic recovery. So we just bought a satellite imaging company called Bird Eye. And for those that are sometimes frustrated with Google Maps and some of the other stuff that's out there, this is a new application that allows you to go in, search what's happening. It's, you know, more frequently updated satellite imagery. And what's really cool about it is, like everything now, it's, you know, portal based. You can use it on your iPad. You could search images and go back and look at them and get a timeline of what all's happened over that site. And like everything else now, you can save it, you can download it, get notifications, and it'll actually send you an alert when the new satellite photo is available for yours. So that's kind of what's happening with Myers and Metro Study. But we'll talk about what's going on with the economy. And obviously COVID-19 has changed everything. And we have seen market-wide sales slow down, though we'll talk about them. We're not nearly as bad off as even Orlando is, and certainly not the national picture is. And then the question is, you know, what is normal? Is it a new normal? And when does that happen? And we'll kind of get into that as we talk. But I'm going to first kind of switch it over to Christine and let her walk us through some of the latest data points.
Sure, thanks, Tony. So yeah, really to that discussion, what is the new normal? If we look at air traffic, so as of Sunday, the TSA screened the most passengers since April 3rd, but the problem was even at 250,000, that's still less than 10% of their typical volume. Here in Florida, we're really focused on the tourism and hospitality, obviously, and everyone's asking, well, when will Disney World reopen? Some are saying it may not be until 2021. And Disney's already ahead of the game in terms of putting some disclaimers on their website, just in relation to the COVID-19 crisis. So if you, what they're saying here is if you come into Disney, you know, you could be exposed to COVID-19, which is an extremely contagious disease that can lead to severe illness and death. And you're assuming that risk by coming into Disney. So we'll see how this all kind of plays out as life tries to get back to normal now that the state is slowly reopening. But a good data point that actually came out just yesterday is that builder confidence is increasing. We can see that sharp dive that it took during the April reading, but as of May, it's ticked up 7 points, so back to 37. 50 is really equilibrium, but so we're still below that, but at least we're seeing, you know, some green shoots in terms of builder confidence as we kind of come out of this. We've also been seeing some great return in terms of MLS showing activity. So this is actually nationwide. The dark blue line is kind of showing activity for 2019. Yellow is 2020. Obviously, we can see that deep decline towards the end of March, early April. But since kind of mid-April, it's really started to increase on a national basis. And right now, we're only down about 10% on a year-over-year basis. If we look at Florida, similar trend that we're seeing here, showing activity down a little bit more than nationwide at 13.4% year over year, but still continuous improvement, and we're getting there. The activity is starting to come back. So if we really want to focus more into Tampa Bay and what's going to help Tampa come out of this, I think a big part of this story is really migration. New people moving to the market. So actually this migration data was released since we last spoke. So it's positive net migration for the top 10 cities in the country between 2018 and 2019, and Tampa falls in at number 6. Why are people moving to these areas? Well, it's because of the larger tax base, which leads to local lower taxes, which makes it easier to draw new companies, and then obviously better employment opportunities, followed by better quality of life, et cetera, and more housing demand. We really expect that trend to actually accelerate as a result of this COVID-19 crisis. All companies were pretty much forced to experiment with remote working, and it's gone a lot better than they expected. So this is actually a note from Redfin that was just released in the last few days. They completed a survey in 4 of the largest metro markets and nationwide, but they really filtered the responses down, asking these would-be home buyers, if you could work remotely permanently, would you consider moving? Now, nearly 62% of respondents in New York said they would. On a national average, it was more than half. Same thing to be true with Boston, San Francisco, and Seattle. So we expect some of these, as companies ease up on their office requirements, and we've already seen that happen. Twitter has announced a permanent work remote policy, same with the tech company Square and Nationwide Home Mortgage. They're all adopting this permanent work from home policy. We expect more announcements for that coming forward, and so that's really going to increase those migration trends, and Tampa can be a prime beneficiary of this. If we're looking kind of at the domestic net migration over the last 6 years, these are the top 10 markets where we're seeing that migration happen. Tampa is in the teal color, and we've made the top 10 for the last 6 years. Squeaking in number 10 in 2013, coming near the top in 2014 and 2015, and then moving to kind of the middle of the pack, 2016 through 2019. But still, we're remaining in the top 10. But really, what market kind of sticks out to everyone that is seeing the most beneficiary of this? Well, it's Austin. So Tony and I thought it would be really good to kind of look at how Tampa's workforce compares to Austin. Kind of Austin's renowned as one of the top markets in the country, if not the top. Well, when we look at Austin's breakdown of industries and we look at Tampa's, there's actually a there's a big similarity between the two markets. The biggest differences are really, if we look at the education and health services sector, Tampa has about 4.6% more of their job concentrations, and that's largely due to the fact that Tampa's a bit of an older population, whereas Austin has more government jobs. But Austin is also the state capital of Texas. But talking about the high income jobs, which are typically financial activities and information, Tampa actually has a greater concentration of financial activities jobs than Austin does, 2.7% more, whereas Austin wins out on the information side. So together, they actually compare very, very similarly in terms of the job breakdown, and we expect that Tampa will get more and more national attention, similar to what Austin has in the upcoming future. And we're seeing that play out in the data already. So this is actually, this is a great chart, and it shows really how well Tampa is performing compared to the rest of the country. This is a compilation of our Zonda data, and what we really did was we looked at the average community sales rate in the beginning of April 2019 and compared that to that average community sales rate in 2020. So Phoenix is actually, I mean, all markets actually decreased year over year. That's really no surprise given everything that's gone on. But Phoenix leads the country in terms of the strongest new home sales rate per community at just over 2 homes per month. And I just want to be specific. We consider a community a product line. So if a community has 50s, 60s, and 70s, that's really, those are 3 product lines. So when we're looking at 2 sales per month, that is by product line. But Tampa actually falls really close behind, and Tampa moved actually from number 11 to number 2 when we're looking at current data. So Tampa is has the second best sales rate in the country. If we look at kind of how those sales rates changed year over year, Tampa, oh yeah, thanks Tony. Tampa actually has the smallest change. So just a negative 11% year over year decline. And this is really huge because if you look through on a year over year basis, how much the new home sales rates have suffered. You know, the national average is down 38%. Charlotte was hit pretty bad with a 40% decline. You know, Houston with the oil issues going on, down 30% year over year. But Tampa only down 11%, and that's still less than half of the next market right behind it, which is Austin, which we already spoke about. So Tampa is really holding up very, very well. And we expect that trend to really continue. You know, builders, they've been so impressive. I spoke on a webinar before about how builders, you know, really need to pivot. And they've done that so quickly, kind of bringing that sales service from the sales center to the online experience. So a lot of you have seen this chart before, so it really measures traffic to builder websites week over week. And the blue line is 2020 data. We can see we started the year stronger than 2019, but then kind of once all the bad news started coming out about COVID-19, we took that sharp dive through mid-March. But pretty much towards the end of March, traffic has started increasing. Builders have delivered great content to their website, and they're reporting week over week traffic increases. And that's been consistent. And actually, if we look at traffic to builder websites on a year over year basis, it's now up 20%, which is huge. So there's great opportunity for our builders here in Tampa. We've got the good migration trends. We're getting traffic to their websites. And then we're also seeing a significant amount of fewer resale listings hit the market. So if we look at kind of a year over year basis of new, year over year comparison of new listings, we're about half of where we were in 2019. We can look at that another way by looking at the resale delisting trend, which kind of shows year over year or week over week increases or week over week decreases. So homes on the market are continuing to be delisted, and we've been seeing that happen since April. So there's less resale inventory on the market. However, we're starting to see an uptick in buyer demand. This is actually from Redfin, and so it measures buyer demand based on, you know, views of different homes, contact to agents, and so it's one of their indexes that they kind of distribute, and we can see it was really increasing year over year from 2017. That was the baseline. We can see over to the right that significant decline, similar to a lot of the economic graphs that we've seen kind of since the COVID-19 crisis. However, since mid-April, it started ticking back up again. So buyer demand is there, and we are certainly hearing that from our builder and developer clients in Tampa, in Florida, and actually on a national basis. Builders are surprised that they're actually doing better than they thought they would in terms of new home sales, and that's because the buyer demand is there. But back to my point about the resale homes. So there are not as many resale homes on the market, but if you look at kind of the new home market since the Great Recession, resale, used home sales have taken significant market share from new home sales. So there is a great opportunity for new home sales to really regain some of that market share. Another way of looking at it is, so the next graph shows between 17 and 19% is really kind of normal. That's how the market share should be for new homes, and that's what we've seen historically. Well, that dropped significantly in the mid 2000s, and we've slowly started to creep back up, but we are still not quite there at 13%. If we can gain another 7% of market share, if that is huge volume opportunity for our builders. And it's really now is the time to sell the benefits of the new home. And many of you are already doing this, as it's been mentioned, we're dealing with a health crisis, not a financial crisis. So during a health crisis, really emphasize the benefits of buying a new home. They have energy efficiency, clean air filtration systems. They're healthier, they're safer. So that's really what we're starting to see in terms of the uptick that in new home sales over the past few weeks. It's been reported on a national basis. But it's also very important to know how consumers are buying today. And, we're seeing this as the builders have pivoted with their websites, but this is actually interesting. So to the right is a Redfin survey, but it was actually from 2017. And they found that 1/3 of all home buyers and 41% of millennial buyers made an offer on a home unseen. And that was 3 years ago, before builders had pivoted and created so much additional content on their website. So we expect if that survey happened now, the percentages would be even greater. So really, to succeed in this market, the builders that have been winning have known their buyers. They're making it convenient for them. They're allowing the buyers to kind of self-service, allowing buyers to have control. They need 24/7 access. So builders are really decoding, and it's been termed the prosumer rather than the consumer. So let's look at it on a positive. If we focus on the new normal, embracing that new normal, well, what does that look like? It's really 10 strategies that you can kind of focus on. Allowing buyers to know that, hey, we're open, we're here when you're ready, making the experience comfortable for them, providing plenty of content as they research their different options. Allow them to visualize and personalize the experience, but also give them control. They're in the driver's seat. They want to control the experience, and they want access to the information at any time, day or night. It's also important to really emphasize the physical world versus the digital world, but meld those two together as best as you can. Again, remote access. I think there was a webinar that was quoted, the busiest times for people to show themselves their homes are Friday and Saturday evenings between 4 and 7. So it's really becoming the new date night, is going out to look at houses. And again, you're ready when they are. You can take action now whenever the buyer is ready. Stay current with your information and emphasize the importance of realtors. So we've heard anecdotally as well from our clients that those who are offering increased incentives to their realtor partners are really seeing an uptick in their sales volume. And that goes back to, realtors don't have as many resale listings to market. So just some quick examples, moving the option choices to an online experience. So here's one way of looking at your home, but with the click of a button, you can quickly change the flooring option and really create the home that you want without leaving your couch. And the good news that kind of comes out of all this data is that buyers, 85% of buyers prefer this experience. They spend about 4 hours doing it. They actually spend 30% more if they, again, are able to have control and do it on their time. So those are just some trends and certain data points that we're seeing kind of on a national basis and some specific to Tampa, but I'll let Tony really dive into the statistics.
Okay, we're going to kind of go through what's happening here in the Tampa market. And anyone that's watched the local news know that we've had issues with our unemployment system. So you could see the data, and they actually update this daily. And the number of claims submitted are much higher than the number of unique claims or the unique claimants. Because we've had issues, some people have gone in 2-3 times or more to file their unemployment claims. So the unique claimant number is still very daunting, still very high at 1,375,000. Here in the state of Florida, we have 10.2 million people in our workforce. So if we took the top end of that unique claim submitted, we've got 15% of the workforce has filed a claim. If we use those that have been identified as just a unique claimant, it's 13.4%. In both of those cases, it's still below the national average. So I don't know if that's a processing issue or not, or the fact is that we have not been quite as hard hit as the national numbers are. But when we got together a couple months ago, Christine and I kind of did a projection for you, and there were 3 categories we said were the highest risk, with hospitality and retail trade being the 2 of them. And we said, what happens if we lose 50% of the hospitality jobs? What happens if we lose 20% of the 160,000 people that work in retail? That we would be looking at an unemployment rate of 10.3%. Well, the official number comes out this Friday, and it will be higher than 10.3%. It will likely be higher than where we were in 2009. It'll be somewhere in the low to mid-teen range for unemployment. Why is that? Because mostly the hospitality sector has been hit harder than we thought. Retail got hit a little bit harder as well. So the national number was 14.7% last month. Again, we think the Tampa number will be somewhere in the 13.4 or higher range. We won't know until it's confirmed on Friday. But what we do know is the job losses have literally dropped off the chart. We're going to have to expand this chart when the numbers come out, but it's over 100,000 jobs were lost in a very short period of time here locally. And the reason why, again, was hospitality. Statewide, they track mass layoffs. We have a website that does that. 79% of all mass layoffs have occurred in the hospitality sector. Now that includes bars and restaurants as well as hotels. I was listening to a webcast just the other day, and it included a gentleman who works for a trade association for the hotel groups, and they said 70% of hotel workers nationwide have been laid off because of COVID-19. This was the data that was available last month, and it was just getting in the early days of COVID. You can see we were starting to lose hospitality jobs. So when the numbers come out again this Friday, we expect them to be pretty substantial. And here's that website where they show all the mass layoffs that have occurred in the state. So what does that mean? It means our GDP numbers were hurt, but all this really only occurred in the last 2 weeks or so of March. So the first quarter numbers were down, but nowhere near down like we're going to see in the second quarter. We have seen some projections that the GDP number will be down 35% in the second quarter. But believe it or not, that 4.8% decline was somewhat blunted because of residential investment in the first quarter. People were still buying homes. We heard great stories in January, February, into early March in terms of home sales here locally, both new and resale. In fact, we had a few builders that by time March was over said that they had their best March ever in their division. So certainly housing was what lifted a negative number, so it wasn't as negative as it could have been. And housing will very likely help to lead us out of this recession. So consumer confidence, this is on a quarterly basis. So you notice the first quarter number was not down that much. But when you look at it in the monthly basis, especially as we move into April, you can see the consumer confidence took a big hit in the month of April. And they break that into 2 sub areas. How do you feel about the present situation? And how do you feel about the future? The gray bar is the present. So you can see just how high and how steady that was over the last 12-month period. And the future expectation was holding pretty well until we got into March, and it started to weaken. In fact, it weakened quite a bit from where it was in February. But surprisingly, this was as of mid-April. And I haven't seen that we use the Conference Board. I did see the University of Michigan Consumer Confidence, which is a different source. They said consumer confidence improved in May. The Conference Board number comes out in another few days, and we'll see if that's happening. But the Conference Board number showed an increase in future expectation in April. So when you look at Florida, we're part of the Southeast region. We've generally been above the national average, and in the month of April, we were just slightly above the national average. But you can see in Florida, our future expectation was pretty level, but we took a much bigger hit. We've got a little bit higher population of seniors here in Florida. So the present situation falling greater than the national average isn't surprising, but by the same token, our future expectation was a little bit higher than the national average. So what does that mean to the home building industry? Well, they ask a question in this survey: Do you intend to buy a home in the coming 6 to 12 months? And you can see February was pretty much the high water mark going all the way back to last summer. So in February, we saw very good sales and it kind of matched that consumer sentiment. The consumer sentiment dropped off in March and again in April, but not significantly, but it was down in April. And then they break that into two subsets. Would you buy a resale home? And what's interesting, between March and April, those committed to buying a resale home actually improved in the midst of COVID-19. And the same thing for new homes. It's not a huge number. It's 0.1% higher than where it was last month. But when we're talking that low of a number, it's a 7-8% increase in terms of March intent versus April intent to purchase. So when both of these subsets are up, yet the overall number is down, how can that be? Because there's a third line item, undecided buyers. And the undecided buyers have very much left the market. So the people who are looking are saying, I'm going to buy resale because it's cheaper than buying new. And those that are buying new say there's health benefits and everything else. I want to go ahead and get a new home today because it'll be my home. And the shoppers or the undecideds have left. So your traffic may be down at your model centers, which are largely been appointment only over the last 30 to 45 days. But the quality of traffic should be up because the lookers are out. And we've heard on the street that in general, people are getting anywhere up to twice the conversion rate that they used to get. So if it was 5%, now they're getting 10% conversion rates today. So the conversion numbers have been up because those lookers are out of the market. One of the reasons why people are still out there looking is mortgage rates. And there still is a fairly sizable gap. And you can make a case for mortgage rates going down a whole nother 100 basis points. The issue was there was such a rush for people to refinance that we saw crazy day-to-day swings and even hourly swings in mortgage rates. Thankfully, the Fed came in with a bunch of liquidity to stabilize that market. But certainly there is a case to be made that rates could creep lower here in the next 30 to 60 days. But we're talking near all-time lows in terms of mortgage rates. So that's helping people stay in the market. So when we look at our for sale, and of course the elephant in the room is Hillsborough County and their fee increase, and they're not quite doubling it. They're $10 short of doubling it, but it's a substantial increase. And for a 2,000 square foot home, we're talking $12,959 increase. And if you're at a 20% gross margin or thereabouts as a builder, that means you've got to raise your price $16,200 to cover that increase. So that means the home price would jump by almost 7%. And this is just on a 2,000 square foot house. Obviously, the dollar amounts would go up with the larger home, but you're talking a 7% price increase that would hit at a time where unemployment's very high, and we're seeing a lot of question about how long this will last and stability in jobs and that going forward. So when Christine kind of alluded to it, Tampa did pretty well. Certainly we saw a decline in our sales pace, but that decline was not anywhere near. In fact, it was arguably 1/3 of the decline that the national average was. So we did drop down a little bit, but we're still talking a fairly sizable market. You can see compared to the national average, and this is just for detached product, not all product. The graph that Christine showed earlier was for all product. This is just detached single family homes, but we're still well above the national average in terms of sales pace on a project by project basis. And you could see where we were to start the year, how strong January, February, and even into March was for the Tampa marketplace. Even with that decline in April, we're still running slightly ahead of where we were in 2018. So it's still a solid year that's out there. But what we are seeing is Pinellas County has pretty much run out of viable land and lot options, that most of the growth is going up into Hernando. So Hillsborough and Pasco, the percent changes weren't that great in terms of activity levels. We're kind of hanging in there with where we're at. But the biggest percentage gain, and obviously Hernando is not a big market, so that equates to about 100 more homes this year than last year in Hernando. But the big percentage gains are happening there. So when you look at the contracted sales, clearly Hillsborough and Pasco are the meat of the market. And it's still roughly almost 2-to-1 in terms of activity level in Hillsborough versus Pasco County. When we look at the price points, you'll notice, and you can see by lot frontage foot where the price points fall for detached housing. Now there is some infill townhome in that under 40 foot range, that tends to make it a little bit more expensive than a true 40-footer. But obviously, as the lots get bigger, the home prices increase, and there's nothing unusual about the chart there. But when you look at the sales activity, the 40-footers are actually selling the best. So what we have seen, obviously, that 55-plus buyer is that demographic that's most at risk to COVID. So we've seen a whole lot of 55-plus communities really slow in terms of activities. And a lot of that is being picked up by the first-time buyer, particularly some people that were renters that want to get out of apartments and get into a single-family home. So that 40-foot product, which is pretty much the entry-level point, unless you're talking a townhome in the Tampa Bay area, is the one that's seen the most activity in terms of sales per product or per project. So certainly a 7% price increase on that kind of lot size and that price point would very much damage what's happening in a market where we have pent-up demand today. I could certainly make a case that, you know, once we get past COVID-19, we are still undersupplied because we cannot build affordable product in the Tampa market. And as fees and everything else increase, that just makes it more difficult. So obviously pre-COVID-19, we're really strong. On a quarter-by-quarter basis, though, compared to the first quarter last year, we're essentially flat in terms of new home starts. We do think it'll probably fall maybe 3 to 5% range here in the second quarter. The fact is, all those homes that were sold January, February, and March will turn into 2Q starts. So we don't see a big kind of decline right here in the second quarter for activity. That will probably most likely be felt further in the year. But certainly there's cancellation risk that's out there. So eye on the backlog and when these units are supposed to close is very key to a successful year this year. Obviously, the fourth quarter, the number of closings, that was going to be our cyclical peak. So in terms of families moving into homes, fourth quarter was it in terms of cyclicality. And when you look on an annual basis, closings peaked 4Q last year, starts actually peaked 1Q this year on an annual basis. Again, we're expecting a little bit of a decline in the second quarter, so that number may come down slightly. As far as for the calendar year, though, we do think that the closing number could drop in the 10% range, maybe a few percent under, maybe a few percent over, but that's kind of our forecast for activity today. Closings per model, we've actually been selling with less models in the marketplace than what we had in 2016. So we're doing a better job at utilizing those models. So on average, for every model home, you're selling almost 3 per month for each model that's out there, still well below where we were in 2006. But again, the lowest model count we've had in recent times was 2012, but the numbers have been down. We kind of hit our cyclical peak in model home activity back in the summer of 2016. So when you look at activity by price point, once again, the affordable price points in Tampa are pretty much in the 230 and under range. And when you look at the annual activity, you'll notice we have some negative numbers on there. The under 149, it's almost impossible to build anything. So there's just virtually no activity there. And what activity there was down substantially. The 150 to 200 band, we saw a 24% decline in activity there. And then when you kind of get into that middle of the move up buyer, not the true upper end, but that 350 to 500, both of those categories were down in terms of activity. These were annual start pace. Different story when you look at annual closing. So the demand was there. Even that 350 to 500, we had much stronger move-ins, and we count a closing when someone occupies the home. But you'll notice the only negative numbers there, once again, on the affordable side. And that's just a function of available product and why those numbers are disappearing. Other than that, the annual closing pace was up 8% compared to last year, and the start pace was 5% higher. So when you look at prices, not surprising, Pinellas County is the most expensive, but Pasco and Hillsborough are sitting right there at the same price point. Now, this is before the impact fee increase. So you're going to be adding, $16,000 to $25,000 per home, depending on the size of that home, which could continue to push demand into Pasco, maybe into North Manatee or Polk County. Pinellas just doesn't have supply. And it's a little bit different buyer that would want to live in Hillsborough County as opposed to going all the way up to Hernando. So when you look at detached pricing, we had some very high expensive communities in Pinellas County essentially sell out in 2019. So that's the reason that prices have eroded. It's more availability of product than it is a shift in pricing in the market. But when you look at Pasco and Hillsborough and the orange and kind of purple line there, we've seen relatively steady pricing continuing to inch up, but not at a substantial pace. So we're not outpricing the market. We're obviously don't want to get too much higher, because when you're looking at what income levels can support based on income levels in general throughout the Tampa statistical area, we can't support much more than a 320 average selling price. And that's kind of where we are in both Pasco and Hillsborough. And I worry what happens to demand when we push above those numbers. So even with COVID, we're still seeing 1 in 3, 1 in 4 floor plans seeing a price increase. We have some that are seeing some price declines, but not many. So we're still seeing the base floor plan prices on almost a 2-to-1 factor being increased as opposed to decreased through the March time period here in Tampa. The other thing we always worry about is what's the finished vacant inventory level. And you'll notice by price point, there's not any worry out there at all. We're talking 1 to 1.3 months worth of supply. Yeah, it's a little bit higher in the under 150, but that's such a small number, it's almost statistically irrelevant. So even at the very highest price bands, our inventory levels are very well balanced. So the issue is, can we continue to get our backlog up without the sales pace that's there? And what happens when we see a spike in finished vacant inventory if some of these under constructions turn into cancellations as we move closer to delivery date? So that will be something we keep an eye on. But when you break it into submarkets, clearly the most finished vacant inventory is sitting down in South Hillsborough County. It is the most active submarket essentially in the state of Florida. It used to be that Orange County and Orlando and Hillsborough County would battle each other for the most active single family county in the state. Obviously Miami-Dade at any given time could go into 5-figure condo development. So when you look at single family development, it was always between Orange and Hillsborough. Well, Hillsborough today is building 7,300 homes over the last 12-month period. Orange County is down to 4,500. So Hillsborough is far and away the most active county for single family homes being built in the state of Florida. And the most active part of that is South Hillsborough, and yet we only have 1.2 months. So that's essentially 36 days worth of standing inventory sitting there. It's a very low level and certainly of no concern. In fact, the only things that kind of slightly jump out are South Tampa and South Pinellas. And those are, when I say South Tampa, I mean the urban infill area of South Tampa, the city. And because those are infill, because they tend to be higher price and most frequently townhome product, we're not concerned at all by 2 months worth of supply there. So overall, our finished vacant numbers are in very good shape depending on what happens with cancellations here through the summer into the fall. So we did kind of our best case, middle of the road, and worst case scenario. And certainly not a V recovery, and we certainly don't think it's going to be a double dip kind of W recovery that we had back in the 70s. But the symbol that we're using is kind of that Nike swoosh. You know, we drop down, pretty quick descent, and then slowly build it back up. Well, in Tampa, that slowly building back up might only be a 3-year window. Under our best case scenario, we could be back at the level of activity we were pre-COVID-19, you know, mid to late 2022, early 23, that time frame, because of the dynamics at Tampa, because where we are, or where we were with job creation, where we are in the baby boomers and their pushing retirement age, with the kind of position Tampa is with workforce and those type of jobs, we think that Tampa could actually outperform the national average, and therefore that swoosh is the more likely case. And for us, in the best case, in 3 years, if we go into this kind of middle of the road, or worst case, it might stretch out a little bit longer. When we look at lot supply, and this is the telling story, particularly when you get into Hillsborough County, we're just slightly over 1 year worth of lots. So that's an undersupplied situation. Even Pasco County, for us, equilibrium is 24 to 36 months. If you're going to take an old grove land, not that there's much old grove land left anymore in the Tampa Bay area, but the theory used to be it's going to take the old orange grove and convert it into single family. You're probably about like 2 years away from delivering your first houses. So that's kind of the replacement cycle for lots. Anything under that puts a lot of pressure on land pricing and lot pricing. And we're below that in the major production counties in Hillsborough and Pasco. Even Hernando, those numbers are dropping relatively quickly. It's only the lots that are sitting out in citrus that are kind of most of those quote dead lots that are there. So when you look at all the submarkets, and again, South Hillsborough is far and away the biggest production area in the county and Tampa Bay and statewide, we're talking less than 12 months worth of lots. So if we do not add another single lot in 11.2 months, there's a house built on every one of those. And all the way up Equilibrium goes everything to the left of University Temple Terrace. And that's just a small infill area, again, almost statistically insignificant. So it's really only Hernando and Citrus that are at or above the equilibrium level. All the rest of Tampa Bay is below it in terms of lot supply. And what's also interesting is when you break them into quartiles, we've got about 5,000 dead lots out there, largely in Citrus County, some areas of Hernando County, that nothing has been built on them in the last 12 months. But we kind of break the supply down by quartile. So the top 25% of the performing subdivisions have less than 13 months worth of lots. And those are largely split between Hillsborough and Pasco County. But even that second quartile, so 50% of our building activity, we have to replace those lots in less than 19 months in order to keep the production engine moving. So our forecast for lot supply, again, this green one is kind of the best case, the yellow is the middle of the road, and the red is the worst case scenario. So in the best case scenario, we may see lot supply creep up a little bit here for the next few quarters and kind of level out and begin to trend downward by 2021. And even in these worser case scenarios, it's kind of the lynch point. By the time we get through the end of 2021, we think that lot supply will be declining once again in the Tampa Bay area. And this is for all products. So this is including Hernando and Citrus into it, which kind of skews it. So let's look at the two big production counties. We ran three scenarios, a 10% decline, a 15%, and a 25% decline. And what that means to lot supply. Well, right now, Hillsborough's at 13.1 months. And over the last 12 months, we delivered 6,869 new lots. Right now, the pipeline of lot development is about 7,500. So we're not sure if all those lots will actually be brought to the market or if they may be slowed a little bit by certain developers. But we're just assuming that all 7,500 of those lots are brought online. It would be slightly higher than the 12-month delivery pace. But with a 10% decline in starts, that only takes us to 16 months worth of lot supply. With a 25% decline in starts, we're still at a 22-month lot supply. And equilibrium is 24 to 36. So in all three of those scenarios, Hillsborough County stays, actually it's beneath equilibrium levels in terms of lot supply. Pasco, same scenario. Once again, we're actually pushing slightly more development than we have over the trailing 12 months. So the lot count would be increasing slightly, but 19.2 months with a 10% decline stays under 28 months worth of lot supply. And at the high end, 25% decline, we're right there at the top end of equilibrium, just slightly under 36 months. So certainly land and lot, even though some builders are saying they've paused a little and they're extending out LOIs 30 to 60 days or so, we anticipate that the lot purchasing and the lot development pace will continue once we move through this. The for rent market, April was the first month of COVID hitting, and the number was around 88% of all rents were paid, maybe not in the first 5 days, but by the time we got to mid-month. And it was a pretty similar number here in the month of April. But you can see in Tampa, our occupancy today is no different than it was a year ago. And yet at the same time, the rents are up 3.5%. There's only one market in the state of Florida that had higher rent growth than Tampa over the last 12 months, and that's the college town of Gainesville. And ironically, that's the closest in terms of rent per month compared to Tampa. We're about $8 more a month here than the city of Gainesville, and they grew just slightly faster than we did. But throughout the state, there are no negative numbers yet. So we are not seeing a lot of rent concessions. We've not got to the point, the person that runs our multifamily consulting practice, her kind of bellwether is when the developer offers 3 months of free rent. So we may see move in 30 days, even 60 days worth of rent if you sign a 12-month agreement now. We're nowhere near that 90 days of free rent. And throughout the state, we're still seeing rental rate increases. And once again, only Gainesville saw a higher number than Tampa. So when we look at the resale data, and we won't get the April resale numbers until later this week, but you could see pending sales were down significantly in the month of March, a 23% decline. even though for the month it was a 7.6%. I'm sorry, 4.7% for the month, but year to date, we're up 7.6%. So the demand has been relatively robust, but we're seeing the supply numbers come down. So when you look at it, we have 2.2 months worth of resale that's out there. 3 to 6 is typical. So the resale competition is as low as any point we have seen. So if there's a buyer out there, they're more likely to buy new today because of lack of supply on the resale side. And you can see that in the prices. We are talking the highest median home price we have seen in the Tampa market ever in the month of March. So we're back above where we were in that 2006 peak period. And you can see how level the red is last year. We usually get to the highest price in the month of June for the year, and then they might fall a little bit and then grow as we move towards year end. Well, last year, that price held for 3 straight months, waned a little bit in September and October. We're right back to it November and December. As we sit today, we're higher than that. So we are going to be talking potentially record home prices in the May, June, July period when we get to that this year. And home prices are up 7.3%. Demand still robust, supply is down, prices are up. Condo, very similar story. In terms of activity, though the increase wasn't quite as much, and year over date, we're just barely ahead of where we were last year. But prices are hanging in there. And even in the condo market, we're talking only 2.8 months worth of condo resale, which is a very low level. And you can see the home price for condos was 10.2% higher in March than it was the same time last year. So that will wrap it up. I'll just give you a little bit of a heads up. Allie Wolf, our chief economist, in addition to hosting her Wednesday COVID-19 impact calls, this coming Thursday, we'll be doing our second quarter housing forecast. And it just happens to be our time as the region in the state of Florida to be added to her call. So we will be doing a kick around the state of Florida to supplement Allie's economic call. And then again, on the 26th next week, our consumer specialist, Molly Carmichael, is hosting new home sales and marketing solutions for today's new normal. And then in June, Tim Sullivan, our senior managing partner for our consulting practice, will host a webinar about shaping communities of tomorrow. So Jennifer, if you want to take back control, if you have any questions or that, we'll try to answer what we're able to.
Great. Thank you, Tony. Thank you, Christine. I always learn so much when you guys do these webinars. I was really surprised to know that all of these increases translate into a 7% increase overnight. That sounds crazy, but that's very true. Hopefully our elected leaders will understand that, and we will be successful in getting them to understand that this is just really bad timing, and maybe we can work together and create a solution that works for everybody instead of hitting all those folks that seem to be struggling the hardest by the first-time home buyer and the people that are working in retail and hospitality and hotels and restaurants. And it seems like we're poised to do a great job for the community, and again, as you put it, lead the economy out of the recession. So we'll keep our fingers crossed. With that, I know that we have a lot of participants. Does anybody have any questions? There's a feature on the bottom, and you can go ahead and start asking questions of all of the panelists. Anything that I know that there's a lot of discussion earlier about the PPP loans. Let's see. If anybody wants to ask a question of any of our panelists, please do so in the chat room or the Q&A feature. We'll give you guys just a couple more minutes to become a little bit more comfortable, and don't be shy. That's what these folks are all here to do, is answer your questions. And thank you all again so much for participating this afternoon. Hopefully this information is helpful to you. I know that there are a lot of things that are going on right now, so if you would like additional information, please let us know, and we will get all of this information out to you as quickly as possible. Can we get a copy of this presentation?
It will be emailed. when
It
processed.
will definitely be email as soon as it's processed. Don't worry about that.
And you've recorded this, so the recording will be posted to the website as well, correct?
Yes, sir. Absolutely. Well, thank you all again so much. Please let us know how we can help you. Stay safe, stay healthy, and keep building that American dream of homeownership. Thanks, guys.